the loss funding of your Mauritius flight catering business. So we have to fund something like 20 odd crores this year.
It is not actually a funding, and it's not a loss funding, Rajiv. And it's good that you asked this question so that we are able to clarify this to everybody here. This is repayment of debt. So therefore, we are not using this money to fund the losses of the unit. We are using this money to pay off part of the principal amount of the debt that is outstanding. And so the losses are being funded by the unit themselves.
And so the quantum for this year would be?
It's close to 18.7 crores for the whole year, but we don't know, as we've mentioned, if you've seen our notes, etc. We've just remitted in Indian rupees. If you were to take, we've remitted just 1.4 crores. We've kept an outlay and we've taken a board approval for about 18.7 crores for the whole year. It all depends on how the business pans out. So if business recovers and if the unit is able to repay some of the principal which is due this year to be repaid from their own accruals, then we will do that. If not, then we have a leeway of paying up to 18.7 crores from EIH.
Sir, on Marrakesh property, so I see that on slide 13 you have done 15% occupancy. So my question is, was it operational for the full quarter, and what is the high season in that market? The best season?
So the hotel did open, and it was, I can't remember the exact month it opened in, but it perhaps was open for the whole quarter. Majority of hotels opened in Morocco and in Marrakesh. The season is very similar to ours. They get a lot of European travel to Marrakesh in the winter months. It's cold in Europe. It's very close by to Europe. And Morocco or Marrakesh has very similar weather to North India. So blue skies, sunny, nice and warm during the day, and chilly at night. So that's when the bulk of business comes in. But I think given and this is speculation, but given that Europe is now opening up, and I know we started to receive some reservations and inquiries from Europe for people wanting to come. We hope that summer, particularly from the UK, which is a strong market, France, which is a strong market, we should see business to Morocco because people just haven't had an opportunity to travel. Let's hope that's the case.
Right, sir. That's about it. Thanks a lot, sir.
Thank you.
Thank you. We have the next question from Sumant Kumar. Sumant, if you can please unmute your line and go ahead.
Yeah, hi Vikram and Kalol.
Hi Sumant, how are you?
I'm good, sir. So how are you?
I'm actually fine, thanks, Sumant. Thank you so much for asking.
So my question is, in incremental revenue in Q4 over Q3 was 37 crore, and incremental EBITDA is only 2.7 crore, which is a 7% flow through QOQ. So Kalol, my observation is in other expenses, it has increased significantly QOQ, right? So what was the key reason for that? The flow through at EBITDA level is very low this quarter.
So one is there was expenses that were unanticipated expenses, which came in the nature of demands, some statutory dues, etc. That was the principal reason in two of our locations. And one is that some of the expenditure of previous quarters, really, the bills were presented later on. And therefore, we were very clear that, we did not want any of the spillover to happen to the next year. And we therefore accounted for all of it on a very, very conservative basis. So that was the reason why the flow through is there. But operationally, if you see, I think it's been fairly good.
Can you tell me what is the number? Can you quantify the both number and then how is the flow through?
Well, I can't give a number, Sumant, on the call because that would really mean getting into too much of detail. But it's in about 7 to 8 crores was on account of demands at various properties, and these are all pertaining to previous year's assessments, some of which we have paid and contested, etc. So yeah, so that's what it is.
So you were saying the both number could be a 7 to 8 crore kind of?
Not fully. Like I said, 7 to 8 crores is only one of them, and the other one is there are certain expenditures which got invoiced to us at a later date.
Okay, so that's
therefore, yeah.
So we can say the one-off number if for this quarter is 7 to 8 crore, right?
A little more than that.
Okay, okay. And talking about overall occupancy side, can you talk about the FY21 occupancy for you in this for a standalone business and ARR for a standalone business?
Sorry, I was unclear with your question, Sumant.
I'm talking about the AR occupancy for a standalone business and ARR. The rough number will also work out.
I think the numbers are there, right? Standalone, 1 minute. So it's standalone, 46% we did occupancies.
Okay.
For the Q4, you're asking, right?
I'm talking about FY21.
The full year?
Yes.
The full year is 27% occupancy.
Okay. And ARR decline over previous year?
And ARR, and I'm just giving ballpark figures.
Right.
We would have ended the year with about 9,000 rupees ARR.
So can you talk about overall the key cities demand scenario, city like Delhi and Mumbai in the current month? I'm talking about the May month.
Vikram, would you like to share about May?
I mean, there are, for example, in Delhi, we have at the Oberoi New Delhi, there are about 20 odd rooms occupied. It's largely long stay guests. Demand is at this time, because of the surge, significantly lower than it was obviously in Q4. People aren't going out, people aren't traveling. Restaurants can only cater to people who are staying in the hotel. So that's unfortunately the position. And in leisure, there are a few long stay guests.
Yeah. So overall, I'm talking about the Mumbai and Delhi and Bangalore. So we have now entered into second phase and might be in June will have some recovery. So can you talk about how's the demand behavior compared to wave 1 and wave 2, right? And now maybe we are exiting in wave 2 in the month of June, right? So can you talk about that?
Well, I think there's a strong correlation between demand and the number of COVID cases, which so as cases come down, we should see easing and demand picking up. Many states, many cities are, as you know, under lockdown, and that doesn't inspire people to go out, even on staycations, etc. So, the only thing I could say is that there's a strong correlation between a fall in cases and demand picking up. We are seeing trends in a number of states where new infections have started to come down, and we hope that trend continues. And there's more positive sentiment in future.
So Sumant, just to add to what Vikram said is, I would draw your attention to the slide where we've shown the performance of various geographies across the 4 quarters, and you would see that these are typically all upward moving. So probably that is something from which a cue could be taken as to what will happen when business opens up.
Thank you.
Last question, sir. The capex for the FY22?
Like Vikram mentioned, we are closely monitoring our capex, and we are doing only essential expenditure. So the capex, meaning we are committed to our capex, but doesn't necessarily mean that we will spend it this year. which means that if there's a project which spans over 2 years or 3 years, probably we'll do stuff which progresses the project, but we do not incur that expenses right now to conserve cash. So all in all, I think we will be, the current year, our total capex spend was in FY21, it was about 59 crores. It will be lesser than that in FY22. Again, it is subject to how things pan out, because if things begin to look better suddenly, if there's a change in shift in sentiment, then we might relook at it. But for the moment, we are looking at capital expenditure very closely.
Thank you so much.
Thank you.
Thank you. A reminder to all, anybody who wishes to ask a question can please raise your hand. We have Amandeep Singh Grover who wishes to ask a question. Amandeep, please go ahead.
Thanks for the opportunity. So, whilst we saw sequential improvement until 4Q FY21 across the industry, now with second wave of COVID hitting India, will it be fair to say that the industry would be back to where it was in 2Q FY21 in terms of occupancy levels? Just wanted to understand what would be the near-term outlook with respect to bookings and cancellations you might be witnessing, along with recovery expectation once the business.
Well, I think the big difference between last year and this year is that we have a vaccine. Although we were doing roughly 3.5 million vaccines a day, that's unfortunately come down. But based on at least what I read and what you read, both with Covishield and Sputnik, there will be substantial increase in supply. And if vaccines increase, which they should, to, again, what I've read is anywhere between 7 and 10 million vaccines a day. I think that would be very, very different to the situation we were in the first year of the pandemic, where there was no vaccine. And what you've seen happening in other parts of the world is as the population begins to get vaccinated, even with I'm not talking about 70%, but even, for example, in the US and in the UK, etc., and in Spain, where 20% of the population is vaccinated, you see significant easing in restrictions, etc., and people traveling, people going out. So I'm more optimistic about this year, but that's my personal view. It's very hard to predict, but certainly I am more optimistic based on what I see happening in other parts of the world, and also a commitment to substantially increase vaccine supply in India.
Sure, sir, that's helpful. And sir, given the moratorium period has now ended and the real stress should now be visible, are you witnessing any distress sale coming up, or will it take another 4 to 5 months?
For a hotel of, let's say, of an Oberoi Trident caliber, it's still few and far between. I mean, the only one that I can think of, and there may be others, but there was certainly the JW, which in Jaipur that became a Leela. That would be one example. There are a few others for sale, but the asking price is still very high.
Sure, sir. And sir, with respect to your international portfolio, we do note that Dubai has seen a faster recovery, and also you touched upon other markets like Morocco. Will it be also possible to say what do you expect on the recovery on the other markets like Egypt, Mauritius, Indonesia, etc.?
Again, linked with vaccination. So Mauritius, I think, will hopefully, vaccinations have started. Incidentally, at our hotel, all our colleagues were vaccinated. We had a vaccination drive, and they've been vaccinated. And I'm sure that's not just us, but others as well. It's a relatively small population. So perhaps later this year, with a population of just over 1 million people, the country will be able to vaccinate. in the UAE, a large part of the population has already been vaccinated. And in Dubai, the Oberoi Dubai has seen a pickup in occupancies, but still rates are low. Whereas a leisure location like the Oberoi Al Zora, which is in the Emirates, it's literally 25 minutes from Dubai airport in Ajman, has seen very strong occupancies and very strong rates, record occupancies and record rates. Again, if you're a leisure location, the hotels tend to do much better than what is traditionally a city hotel location that depends to a great extent on corporate travel.
So that was really helpful. And the last one from my side. So on your recent alliance with Mandarin Oriental, can you just take a moment to give us some sense on how this has helped both the franchises, especially due to similarities in your guests, like the fans of MO and Oberoi One? Or will it be too early to comment on?
Well, I think we started to collaborate on many, whether it's HR or IT and other initiatives in sharing information. But I think till international travel doesn't resume, you will not see our guests staying at a Mandarin hotel or a Mandarin guest, or the demand will be somewhat limited because it depends on international travel.
Sure, that's helpful. That's all from my side, and all the very best.
Thanks, Amandeep. Thank you. Take care.
We have the next question from Shivaji Mehta. Shivaji, if you can please go ahead.
Hi, can you hear me?
Yes, Shivaji, we can hear you.
Good afternoon, Shivaji.
Hi,
Good afternoon. Thanks for the opportunity. So, do you feel that once the recovery happens, there could be more, say, outbound travel as compared to inbound travel, and that could probably delay the recovery in India?
Your guess is as good as mine, Shivaji. Today, unfortunately, with the situation as bad as it is, India is on the red list. How that happens in future, Europe is thinking of introducing vaccine passports. That looks quite imminent. I can't speculate on it. So it's your guess is as good as mine.
Sure, thanks. Just another question on the industry. Do you expect to see some more consolidation going ahead, say in the next 6 to 12 months?
Again, I just your guess is probably better than mine.
All right, thanks a lot, sir. Thank you.
So we have a question from Venkat Samala. Venkat, if you can please unmute your line and go ahead. Hi, Venkat.
Hi, am I audible?
Yeah, Venkat, we can hear you.
Hello, Venkat.
Yeah. Hi, sir. Hope you all's well at your end.
Yeah, touch wood. How are you?
I'm good, thanks. So just wanted to understand the proportion or the revenue mix of F&B has gone up significantly. I think part of it is to do with a more number of weddings. But just wanted to understand, is there anything else which has also contributed to this mix change? And if at all, we can see this structurally evolve as we move forward as well, as if at all you've added any more revenue avenues during this last 3-4 quarters.
Right. And Khalil, I'll have a go at it, but please feel free to add. I think one of the weddings you commented on, and that's across location, but also people want to go and dine where they feel standards are high, where they feel that they are in a safe environment, where measures related to their safety and hygiene are addressed with complete commitment. And I think confidence that people have in both the Oberoi and the Trident brands help us perhaps attract a greater amount of F&B revenue. I don't have any data to substantiate that because I don't know relative to restaurants, hotels, freestanding restaurants, how we do. But I know that our restaurants, prior to the current surge, people were going out and dining and dining at our restaurants. So it's not only banqueting, but also people dining out.
Right, sure. Another thing which I just wanted to understand is with respect to...
Maybe there's one other thing that I'd like to add, is that we saw, during the early part of the lockdown, people were dining, ordering takeaway. But the minute the things started to ease, we saw a declining trend in people ordering food at home and an increasing trend in people dining in restaurants. And that was quite significant. So I thought I'd just add that as well.
Right. So if you could just help us understand with respect to this dine-in revenues, what could the recovery be? I mean, even if you're not aware of the exact numbers, but ballpark should be okay.
I don't even want to hazard a guess. Kalol may hazard a guess, but it really depends on cases coming down, right? If cases come down, restrictions are eased, people will go out and dine. It's to do with people feeling safe.
But Venkat, is your question about the past quarters or is your question futuristic?
Yeah, it's more to do with Q4 actually. I mean, Q4, so we've seen QOQ improvement in F&B mix, right? And already Q3, you had a significantly higher F&B mix. So I was just trying to understand, I mean, what could have been the contributing factors to that?
Yeah, so Venkat, your question is right actually. And in the Q4, we did see a lot of traction in the F&B business, especially at many of our hotels. Delhi, for example, did exceedingly well. The individual restaurants did very well. Delhi, Gurgaon, NCR. Even our new restaurants. Bangalore did very well. So these are, I think the traction in food and beverage business has been really good in terms of dine-in.
Right. Sure. Okay. And with respect to the way that you are thinking about how you would be opening up your new hotels, would there be any structural change with respect to, say, you would have a higher leaning towards the leisure locations versus the metro or the urban centers, as we call it? I mean, how are you thinking about it as on today? I know it's a fluid situation, but as on today, what your thinking is looking like?
Kalol, do you want to comment?
Well, you still have to wait for our 5-year strategic plan that we've been talking about, because unfortunately, because of this second wave, people have just decided at the moment to just live in the present first.
Right.
Yeah. So maybe give it a few months before that question really comes up. And of course, in general, I can say that most companies, including ours, everybody is looking at how business can be de-risked further in future. So obviously, whatever needs to be taken, whether it's newer lines of business or whether it's a change in mix, these are obvious things that every company will look at, and we are no exception. We will also do it the same.
Sure. Okay. And sir, just wanted to understand, at your international properties, is it fair to assume that you would be having a higher proportion of the Indian diaspora?
A highest proportion of Indian guests?
Yeah.
For example, in Dubai, that's certainly the case. Indian guests are at the Oberoi Dubai is the single largest segment, but that's not true for the other locations. And Al Zora, it's largely UAE business and business from Saudi Arabia, etc. So GCE countries. Sure.
Understood. So it's more like a property-centric thing, and you cannot make a blanket assumption about this. Sure, sure. Okay. And one last question, sir. What is the cash burn in Q4 versus say Q3?
Well, if you see the EBITDA numbers, so it's
Right,
minus 16 crore as I mentioned in the Q4.
right,
So I think in the quarters that went by, really cash burning had really come down quite drastically. But let's see
right,
what happens in the current quarter. It's difficult to state.
right. But what would the quantum be for Q4, sir?
So if you take, actually, it's a positive. If you see at the end of the day, as I mentioned, that some of the cash outflow was on account of expenditures pertaining to previous quarter where the invoicing happened in the current quarter, etc.
Right.
Some of these were spilled over expenditures. So if you look at it um, for the quarter only, if you were to match apples to apples, then very negligible cash burn.
Right, right, right. So if we take out the impact of these spillovers, then we are breaking even, largely breaking even.
Yeah,
Sure, sir. Good, good. Thank you. Thanks a lot. Wish you all the best.
thank you.
Thanks, Venkat. Thank you.
Thanks. In the interest of time, we can take two last questions. I request the next two participants to take their questions to one each. Amit, if you can please unmute your line and go ahead.
Hello, Sajid. Hello, can you hear me?
Amit, we can't hear you.
Hello,
Amit, you'll have to be a little louder.
is that okay?
Much
Yes.
better.
Hello, hello.
Please carry on, Amit. We can hear you.
Yeah, yeah. 2 years back, Jet Airways went bankrupt. So I think we had to write off some debts regarding the same. And now the Jet Airways is seem to be reviving again. Is there any chance of that money coming back again to the books?
Well, of course, our Form B has had already been submitted, and depending on the resolution plan going through, of course, it has gone through. Depending on it getting implemented, we will certainly get whatever is decided by the NCLT.
What is that debt you have been asking for? The payment?
Well, the write-off was 85 crores.
Yeah.
Now, based on how much is supposed to be received back, I think we'll have to still wait for the last word to come out because the NCLT has okayed the plan, but it's still not got implemented. So we'll have to wait for the implementation to get over.
No, at this stage, how much do you expect? Just a guesswork.
Well, I don't think it'll be more than 5 to 10 crores at the most.
That's it.
Yeah.
Okay. Then. Thank you. That's it.
Thank you.
We'll take one last question from Sumant Kumar. Sumant, please go ahead.
Question is regarding the when the business is going to recover, or you can say the top line is going to normalize. So how much cost is going to recover?
That we're, to see what's going on with the second wave is just very difficult for anybody who is Indian, and also probably around the world. And one just hopes that vaccine deployment significantly increases, and we see sharp falls in the number of new cases reported every day. But right now, I to everybody on this call, I wish you and your families good health and safety, and we look forward to talking to you again. And I'll hand it over to Kalol as well.
Thank you, Vikram. Thank you, Karan, and thank you everybody else on the call. Thank you for making time out today morning. And of course, we are all optimistic, and we hope to have better performances in the years going ahead. Wish you all good health. Thank you so much.
Thank you, Mr. Vikram and Mr. Kalol, for taking your time and answering everyone's questions.
Thank you. Bye-bye.
Bye.
On behalf of Ambit Capital, I wish you all the very best, and thank you everyone for joining the call.